Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We'll hear from Mark Selby, Chairman and CEO of Canada Nickel Company. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Canada Nickel Company webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the company's corporate presentation. That can be found on the company's website, canadanickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures related to Canada Nickel. Before we pass the baton to Mark, I will start off with a couple of comments about nickel. Nickel has long been an important component in stainless steel, and the steel industry is obviously still the largest consumer, but nickel has a rapidly growing market for batteries, particularly used in electric vehicles. Much like many commonly used metals, much of the low-hanging fruit or high-grade near-surface deposits have been mined, and we'll likely find ourselves turning to deeper, lower-grade, or more metallurgically challenging projects to provide for future demand. A quality project in a politically and mining-friendly area is rare and of great value indeed. So with that said, we have Canada Nickel presenting today. Canada Nickel's flagship is its large Crawford project located in the Timmins area of Ontario. With that, I now turn it over to Mark to update our audience on the company.
Thanks, Tim. Thanks for that introduction. I'll jump ahead here to the first slide. I realized today it's been 8 months since we did an update with Red Cloud. During that time frame, we've completed our PEA. We've acquired 5 additional properties in the region, made additional discoveries, and I think the next 8 to 12 months here is going to be very exciting as well. As Tim has highlighted, nickel is playing a key role in the EV sector, and so we're aggressively advancing our Crawford Nickel project, which is a new sulfide discovery just outside Timmins, because we truly believe that nickel is going to go through one of its super cycles, which happens every 15 to 20 years. We went through one in the late 60s. We went through another one in the late 80s, one in the mid 2000s, and we're shaping up yet again for another one of these super cycles mid-decade. Nickel does what it does best and completely surprised the market. Most analysts were expecting about a 4% surplus this year, but because demand has grown at nearly 20%, that's 3 to 5 times what we've seen in other base metals. We are seeing now a deficit of about 4 to 5% in the marketplace today, and that's with EV demand from the EV sector growing at well over 100% annually. And, again, that momentum is not going to slow down anytime soon. This is a whole new source of demand during a period where outside of Indonesia, rest of world nickel supply has been declining year in, year out over the last 6 years. So all of those EV consumers who are looking for new nickel and don't want to depend on Chinese controlled parts of Indonesia are finding, the pool of nickel that's available shrinking. One thing I really want to highlight, and is, I think a key factor in the nickel market going forward and a key focus for what we're doing, nickel has unfortunately had a long history of dirty nickel supply. The very first generation of nickel supply are the large sulfide projects that we're familiar with in Sudbury. Unfortunately, those came with a massive SO2 footprint. Those of you who remember acid rain in the 1980s, that was all generated by SO2, generated in Sudbury. And so at that time, they were emitting dozens of tons of SO2 for every ton of nickel that was produced. By the early 2000s, those deposits could no longer keep up with the large demand growth we saw from China. China came up with nickel pig iron, simply processing laterite ore. Unfortunately, that came with an environmental footprint of dozens of tons of CO2 per ton of nickel that's produced. And again, Elon Musk invented Tesla with the goal of decarbonizing transportation. So, having to buy nickel with a high carbon footprint is the last thing he wants to do. And again, we've yet to see Tesla sign, or any of the other EV makers sign, a deal with nickel that's coming from Indonesia. This sets the background for what we're really trying to do with Canada Nickel, and with Crawford specifically. We really believe, this is the forefront of the third generation of nickel supply. Any of the leaders of a new generation of nickel supply, whether it was Inco with the original sulfides, with Tsingshan, with NPI, has been able to create a huge amount of market value in a very short period of time, and that's what we intend to do with Crawford, and what we think is a district scale play in Timmins. These are lower grade, but they are very large scale. They are open pittable, which means they are easily scalable. And most importantly, we can produce nickel because we're in an area with lots of low carbon electricity. And the deposits are hosted in minerals that, when are exposed to air, spontaneously absorb CO2. Specifically where the project is sitting in Timmins, we're just outside the city, adjacent to a highway, rail lines, power lines, so all the major infrastructure in place. We just completed a PEA last May, just 20 months after we started drilling just over 2 years ago, and we expect to have our feasibility study done by this time next year. Our PEA, 1.2 billion NAV, 16% IRR, the 25-year mine life, with cash costs of just over $1 a pound, and all-in costs just under $2 a pound. Again, position us, exactly where we want to be in terms of being a leader of this next generation of nickel supply. In terms of the team, again, done this before in my past life with RNC in terms of advancing the Dumont project through to fully construction permitted project, and we intend to replicate that here. And so again, we continue to draw people in as we need to take this project forward. This is one of the key slides in this presentation. Analysts have always underestimated nickel demand. If you go back and look at most people's forecasts at the beginning of this year, they had mid-single-digit growth for nickel demand in 2021. And as I said, we're looking at anywhere from 15 to 20% growth in nickel this year, driven not just by the EV sector, very strong growth in the stainless steel sector, but 100% growth in the EV market. And again, for the next few years, we're going to see growth continue in that range, in the 50 to 100% range per year. What that means is we need to double nickel supply if we want to keep up with demand growth. And again, outside of Indonesia, there's very little visibility on any projects there. So even if we had 1.5 million additional tons come from Indonesia over the next few years, that would still leave a massive gap in terms of nickel supply. Again, highlighting, this is what drove Elon Musk to talk about environmentally sensitive nickel, is this massive airborne footprint in that rightmost bar. That is the carbon footprint that's generated by producing nickel from laterite ore in places where you only have access to coal-fired thermal power, which is where the bulk of nickel pig iron is produced today. So in contrast, we've got the Crawford project. We're sitting just up the highway, north of Kidd Creek, north of the city of Timmins. We've got all the major infrastructure you would need in place. Timmins, I don't think gets enough credit for the fact that it is a very, very good location. You've got 4 of the 6 largest nickel mines that have been permitted and built over the last 15 years within 200 miles of Kidd Creek. You've got, Kidd Creek to Timmins. You've got Osisko to the east, Dumont to the east, Detour to the northeast, and IAMGOLD's Côté project to the southwest. So just about as good a location as anywhere in the country to be able to permit the kind of large scale open pit operation we're contemplating. We have the added benefit of the Kidd Creek mill site, where it's only partly utilized today, and we have the opportunity, if we need to be able to look at repurposing one of the 4 lines that are there to be able to get up and get started on a much smaller, what we're calling commercial pilot plant scale, to prove up the flow sheet if we need to do that before we raise the $1 billion to build the big project. As I said, in terms of the PEA results, which came out last May, very, very happy with the results. One thing I want to underscore, and we'll come back later to, we locked in the resource for this project just 12 months after we started drilling. That was on hole 65. Today we're at hole 170. But even at that very early stage, we're able to generate over $1 billion NAV, 16% IRR. I'll show you a few slides. We would want to be one of the largest five largest nickel sulfide operations globally when fully ramped up. We would produce 840,000 tons over a 25-year mine life. In terms of our combined resource, you could add several of our higher grade peers together and still only add up to a fraction of the resource that we have today. Cash cost wise, we're very well positioned. And again, you can see, given the scale that we're operating at and the cash cost position, just how much operating income and cash flow this mine can generate. This slide just goes in a little more detail in terms of how we ramp up by phase. We start with a single line, we twin it, we add some additional capacity to get up to 120,000 tons a day. At that rate, we would be the largest base metal mine in Canada. So larger than Highland Valley, larger than Raglan, larger than Voisey's Bay. Again, very in terms of the kind of assets that a major or large mid-tier would ultimately want to own, that's the kind of scale asset they would greatly like to have. In terms of the cost curve, we're in the middle of the first quartile. And increasingly important, over the coming decade is where you're sitting on the carbon curve. So with Skarn, we're in the first decile of carbon output. This figure here does not include any benefit from our tailings and waste rock, and we expect to be able in a position to quantify that at least preliminarily by the time we get our feasibility study done. So, we expect this number to come down by the time we complete our feasibility study. These deposits are low grade, but the minerals, two of the three nickel minerals we mine have a 70% plus nickel content, which allows us to produce a high grade concentrate. So we'll produce a high grade concentrate at 35% and a standard grade concentrate at 12%. We'll also produce a magnetite that contains chrome. Nickel, iron, and chrome are the three constituent elements to make stainless steel. Which is why we chose as a PEA path to be able to use the same, lower capital cost RKEF AOD plants that you see used in China and Indonesia, except we're feeding them with low carbon electricity and much higher grade feeds than they would be processing. We had CRU come up with what the kind of returns people would need and what price they could pay for the feed for that kind of operation. The other big reason we did is you can see the margins here are much higher. I know nickel sulfate gets a lot of airtime, but the margins in the US and European stainless market are actually much higher than sulfate. It's an easier product to make. And again, negotiating wise, the fact that we're not at this point committed to the EV sector or committed to the existing smelters, gives us a lot of negotiating leverage with both of those groups as we go forward to the feasibility study. We expect by the time we get to feasibility study, roughly half our nickel will go down a path to the EV market, but we'll still have at least half of the nickel and then all of that iron and chrome product go into down the stainless steel path, which we think gives us the most flexibility. In terms of being a zero carbon operation, it's the combination of zero carbon electricity, having all that infrastructure in place, and again, tailings and waste rock that spontaneously absorb CO2 when it's exposed to air. That's a very valuable property to have access to going forward. We've got great relationships with all three local First Nations groups, and we expect to be able to get to definitive agreements with all of these groups before we get to the feasibility study completion. With Dumont, in my past life, we had great support from the community and First Nations, and we intend to replicate that here with this project. This is a key slide. A lot of juniors, by that time they get around to a PEA, they've done drilling. They've exhausted all the other news flow they can do, and they eventually get around to get the PEA done. We cut it off very early. So again, to underscore, this resource was cut off at hole 65. We're at hole 170 today. We expect to have a resource base that's 50 to 100% larger for the feasibility study than we had for the PEA. And, again, we expect that to have a very material improvement on the NPV, to have that higher value, lower cost material available, not just bigger for big sake. The second key piece, and you're going to see news flow before the end of the year here, is on recovery optimization. We had done less than 1 year's work when we had released the PEA, and these deposits do take some work. So again, we've got, we believe, some significant upside in terms of improving the overall recovery, and again, a very material improvement. We've talked about the zero carbon footprint. Any nickel that we send to the EV market will allow us to capture the value from the cobalt PGMs that are already just sitting in the concentrate that's there. And then we've got some other opportunities there to generate additional value that's not there in the PEA. The second key stream of news flow that we're going to have between now and if we talk again a year from now, will be really leveraging what we think is a district scale play in Timmins. Again, past life with Dumont was really a single deposit. There was no ultramafics of any scale nearby. That's not the case in Timmins. We've identified a number of properties and properties that are not too distant from our current Crawford project. That we believe by the time we're done, this chart here is one by Vale showing all the nickel sulfide discoveries over time. That we'll become one of the largest nickel sulfide discoveries ever. This graphic here, that little peanut there is what 900 million tons looks like at the scale. Anything that is in pink is potentially a nickel-bearing ultramafic. Inco in the 60s went around and poked a few holes in these things, didn't see any high grade and left. But those few holes do provide good indicators for us in terms of what might be nickel-bearing ultramafics, and again are helpful. To confirm our geophysical approach, is continuing to deliver the right targets for us. We drilled our Nesbitt discovery, and again, where we see our coincident geophysical anomaly came up with some pretty nice results for us. These are pretty decent grade core. We also hit the kind of mineralization we're looking for at McDermott, again, sort of roughly in line with the kind of grades that our average grade would look at. And again, this stream of district scale exploration play on top of unlocking and de-risking through the feasibility study process, we believe will be a catalyst to move the share price materially higher, over the coming 12 months. Year to date, there's been a huge amount of activity in the nickel sector. A couple of deals that happened in Australia before interest in nickel even started to take off. BHP acquired Honeymoon Well. Grade about double what we are, but nearby one of their existing operations, which Mount Keith is the grandparent of these kinds of ultramafic deposits. Oz Minerals acquired for a value of $280 million a deposit that has a nickel grade lower than we have. This is actually most of that copper is in a separate deposit. When BHP announced they were selling their oil and gas business, they were announced that they were expanding their low-grade ultramafic operations by 40%. And then we've seen, what's happened. We've got a front row seat to what's happened with BHP and Wyloo in their bidding for Noront. And then Western Areas, which is one of the few standalone sulfide operations, is attracting interest from IGO. So, again, we're just in the early stages of this nickel cycle, and we're already seeing a significant amount of corporate activity. And I think, portends well for what we think is going to happen through the coming years to the middle part of this decade. Because again, at the end of the day, you get one or two good sulfide discoveries per decade. They're a scarce commodity, and because scarce commodities always trade out at premium valuations, which we've seen decade in and decade out, for these various operations. And again, the latest deal there is, what we're aspiring to try and unlock with Canada Nickel. Management and board continue to buy the stock all the way through the past year. You'll see numerous buys by various members of our management team and board. And again, that should give you some real comfort that this team does believe in this project and is ultimately here to deliver maximum value for shareholders. So again, nickel is about to enter one of its super cycles that we see every 15 to 20 years. We believe that we're at the forefront of a new generation of nickel supply. That'll be the first generation of nickel supply that does not come with a massive airborne footprint associated with it, and is again the right kind of nickel that the market's looking for the coming decades. And we have a great project in an ideal location that we're able to aggressively advance because of our experience with these kind of deposits. And we expect to be able to bring this project into production to be ready for the great nickel market that's coming down the pipe. And with that, I'll be glad to answer any questions people have.
Great. Well, thank you, Mark, for a very informative presentation. We'll now start the Q&A portion of this webinar. Reminder to everyone on the line that you can type your questions into the chat box at any time. And we already do have quite a few questions. Maybe I'll break them out by group here and start off with general nickel market questions. One question is about substitution. Are there other elements that could be used as substitutes for nickel, either in steel or in EV applications in case of a nickel shortage?
Sure. So in the case of batteries, lithium iron phosphate is a lower cost, lower range alternative. And so, my belief is, there won't be enough nickel by the end of this decade. So the car companies will just convince people that, the LFP battery will give them as much range as they need. So we'll see more LFP used there, and they'll save the nickel for things like, it's important to remember, the Ford F-150 truck, it has to be a nickel battery. It wouldn't be able to make it out of the parking lot with an LFP battery. And then you also have, it's just not, batteries are not just cars. You've got, a bunch of semi-truck makers who are looking to build semi-trucks. And again, those are applications where you're going to have a very large, and you're going to need the highest energy density battery that you can get. So, my view is nickel will be rationed to those most demanding applications, and lithium iron phosphate, will cover off the balance of it. On the steel side, the thing to remember, and this is part of the reason why nickel goes through these, sharp spikes that are more pronounced than the other commodities, is nickel has always been the most expensive base metal. And so because it has been the most expensive base metal, you only use it when you need to. So, all of the current steel and alloy applications, nickel is there because it has a specific engineering property that people want to take advantage of. And a lot of the other, options for that are things like cobalt, molybdenum, and, those are even higher cost than nickel today. So, as we saw back in the mid 2000s, there were some applications that shifted to lower grades of stainless steel, and we would see the same thing again. But there's not nearly as much substitutability as there is for a lot of other commodities because of nickel's rank as always the highest price metal, base metal.
Great. And we did have some questions on nickel sulfate. I think BHP just announced nickel sulfate production capability. I guess what should and who should get involved in the US and Canada, and just some other, a couple of questions related to that and about sulfate plant size and nickel volume and all of that.
Sulfate isn't actually a horrible product. I would encourage people who are keen EV investors to watch the Elon Musk Battery Day presentation from just over a year ago. He highlighted the fact that, a lot of that feed travels a very long distance. Pure sulfate is only 22% nickel. The rest of it is sulfate and water. And so, car companies are very keen, always looking the entire value chain, and sulfate is a horrible product to convert nickel. Literally, what BHP is doing is taking a 99.8% nickel feed, and instead of making a briquette, they're taking it to make a 22% nickel sulfate product. What I think, and again, in past lives and discussions with various supply chain participants, what they would like to do is bring a nickel feed in the front door. They would do all the steps, and out comes the back would be a N811622, battery precursor mix that would then get stuck in a can and sent to the battery maker. So the template of what I see evolving is Blackstone Minerals has a joint venture with EcoPro. EcoPro is a Korean battery precursor maker in Vietnam, at their project in Vietnam, where nickel concentrate comes in the front door and precursor out the back. And that's what I envision somewhere between Timmins and the various car plants in southern Ontario and the Northeast US. is you'll see one of those plants get built by one of the battery supply chain people over the next year or so, or the plans for that construction to happen. And that's the way I think you'll see the market evolve. So we have no plans at this point to make sulfate. What I envision for the EV is we'll either cut a deal with the traditional processors, or we'll have a deal to do one of these, nickel in one end, precursor out the other end kind of plants.
Great. And one related question here, but what % of the ingredients for an EV battery is nickel?
It depends by battery type, but what's really interesting is like 3 years ago, the main nickel containing batteries were called nickel, cobalt, manganese, and they use different proportions of those metals. But the traditional one was 1-1-1, which is 1/3 nickel, 1/3 cobalt, 1/3 manganese. The big spike in nickel and cobalt prices a few years ago, the battery makers very quickly did a pile of R&D and worked to get cobalt out of that thing. So today, the market's really split and moving very quickly either to LFP, lithium iron phosphate, which has no nickel and has the low range. Nickel is the thing that gives the batteries the highest energy density and the highest range. And they're moving up to 811 or even higher. Tesla uses over 90% nickel in their batteries. So 80 to 90% is what you're going to see as the most common nickel containing battery chemistry going forward.
Great. And then some questions here, kind of turning to the project itself. Mm-hmm. We had a couple of questions on the carbon emissions. Yep. What % of your carbon reductions are due to absorption?
Yeah, so right now that 2.8 number that you see, that includes no offset from the tailings and waste rock. So that is simply what the amount of diesel that is still being used by trucks that we can't electrify. Our hope is by the feasibility study, it's the bigger trucks are electric today, so that's not an issue. It's some of the smaller trucks where there's not an electric option today, and we're hoping by the feasibility study that will exist. And the second piece is there's still a little bit of carbon in the Ontario grid, which again, if you just drew it around Northeast Ontario rather than the entire province, the amount of carbon in the Northeast Ontario grid is much smaller. So, we're hoping with changes in both of those that our carbon footprint will shrink dramatically. And then, what we're looking to do right now is FPX is doing this, Giga is doing this, any of these low grade ultramafics have the potential to sequester carbon. So we're working to quantify that. But we trademarked about 1.5 years ago the terms net zero nickel, net zero cobalt, net zero iron, because we truly believe we get to a point where, we can produce a zero carbon product. So we can't demonstrate that today. But over the coming year or so, we expect to be in a position to be able to do that and hopefully have some carbon credits for sale.
Great. And actually there was a question that was related to that. What are your plans on monetizing the carbon reductions overall?
Yeah, no, again, given the scale of the resource that we have, and the fact that, again, that carbon sequestration will happen for decades after that, I have a secret dream that, someday we'll do one of the first, carbon streams for a mining project to generate, we'll be able to monetize a stream of carbon credits up front. So, we'll see how that goes. But, again, that's a very real thing. Again, you see that in other carbon credit areas where there's a very long life, things like forests and so forth, that they are able to monetize some of those carbon credits. And then, the other thing, that is going to be a real upside is by the middle part of this decade, the European Union will be taxing imported products based on their carbon content. And so, things like steel and steel alloys, like nickel, will be one of the first things that will get hit. And so, our belief is that by that time frame, when that taxing mechanism comes in, a premium should emerge for the lowest carbon options, of which we'll be in a good position to take advantage of that. So those are the two ways that we expect to be able to create some value from the low carbon footprint.
Great. And then we had a few questions, quite a few related to the project, different aspects. Maybe I'll start it off with, since we're talking about nickel, but
there's a question, do you also have platinum? I note that I remember some drilling results announced this summer where you had encountered a more platinum group metal rich zone.
Yeah, no, that's good. So we actually, there's sort of the PGMs show up in 3 areas. So we've got a separate PGM horizon, that's outside of the nickel ore body itself. So, that's at a specific geological contact and it extends for kilometers. We at this point, we've been focused on just drilling off the main nickel resources. So we haven't spent much time on that. So that's PGM source 1. PGM source 2 is within the ore body itself, even though they're very low concentrations. Because we're upgrading the material so dramatically, the PGMs do get upgraded to a payable level from a good chunk of the main nickel ore body. So we'll get a second source of PGMs there. And then the third one is we've seen in one area on the western extension of the main zone, there's a little geophysical bump that's happening. And what we've noticed around there is that we have both high nickel grades, and high for us is 0.4 to 0.5, and PGM grades that range anywhere from kind of 0.2 grams a ton to 2 grams a ton. So it's still early days in understanding sort of how those are related to each other, but those are pretty exciting opportunities, and again could provide an earlier source of revenue for us, given that it doesn't take many grams of PGMs to bump up the NSR per ton of the rock that you're mining. So
great. And we had a couple of questions related to ongoing drilling.
Yep.
Obviously, I know there were some drill holes that you had visual results, but still awaiting assay results. When might you expect some assays, and when would you be releasing more results from the summer's drilling program?
Yes, no, I know that's a question that's near and dear to many investors' hearts, as I can see comments on the boards, and I can tell you that I am as keen to get as results as possible, but we've got 2 labs going right now, and one of the labs promised 4 weeks and is now delivering 16 weeks. So we're still 4 months behind, and so. And again, one hole doesn't come out as one nice batch. You get sort of pieces that come out. So we're still, once we get a set of holes that makes sense to release as a set of holes, we will put those out. I can't say exactly when that's going to happen, but, I'm hoping in the next, 4 to 8 weeks that you'll start to see some of the assays for those results come out. Again, if there was anything that came through that was materially different than we're expecting, either better or worse, we would disclose those to the market. We've been transparent from day one with this project. So do not read in the absence of drilling results as something negative going on with the story. You've seen a management and board buy stock multiple times over the last 4 months. So either we're crazy or we actually believe in the story, and there's nothing material that's different in the story today.
Great. And one question here, just related to current status. What's the cash reserve today? When do you think you'd have to do another round of financing?
Yeah, so we were pretty transparent all through last year, that we're looking to do, another $20 to $30 million to be able to get the feasibility study completed. We raised $12 million of flow through last fall. So we're looking to do another $10 to $20 million between now and January. We're good right through into January, February. And if for whatever reason there was any issue with that, we would slow things down. But, as we press release, we are in discussions with some strategic investors. And there's we're pretty under institutionally invested at this point too. So, there is interest on that front too. So, we'll look to do another 10 to 20 million between now and January.
Okay, great. And actually, we did have a question kind of down that alley. Have you had any time frame on when you hope to, and this is sort of different, but sign a deal with strategic investors, which may be EV companies, battery manufacturers, or mining majors?
It'll be more of the sort of more traditional mining investors than the EV chain. With having a fully permitted construction-ready project in my past life, that's where typically the EV and battery supply chain people tend to show the most interest. They don't like to take mining development risk. But that being said, there are people who are interested at all parts of the mining cycle right now. And so, hopefully have something in place here sooner than later. So.
Great. And one follow-up question, kind of along those lines, have you received commitments or interest from buyers of your future products?
Not at this point, but again, some of the people we're in discussions with would like to have some offtake. They would only get a little bit of it at this point in time. Offtake is a very valuable product. So again, our conversations around that will pick up more when we're closer to completing the feasibility study, and even more so post feasibility study.
Great. And we did have a question kind of along similar but different lines. What is your plan to raise the $1 billion you need to build a mine?
Yeah, so there's basically three components to most project finance facilities. And again, last time with in my past life, we work with Rothschild all through that process. So there's effectively an equity bucket that'll typically come from a JV partner. Then there'll be sort of a more mezzanine tranche that'll either be equity raised by selling. We could look and sell our PGMs, maybe our carbon credits. We'd raise another chunk of equity that's there. And then the debt portion would be either one, a typical project finance facility, or second would be there's a specific project bond market in Scandinavia that is generally pretty interesting. It's higher cost, but more flexible. So, we'll start to explore those options beginning in 2022 to be in a position that we can, be able to pull the trigger on that, post feasibility study. But, the goal here is to try, and keep as much of the project and get it financed with having to do the least amount of equity raise in the broader market. So, again, historically, you've seen that the Asian trading houses and some of the larger, Asian consumers be willing to come in and take an equity stake in the project in return for the offtake, and then arrange not only the equity portion of the financing, but help arrange the rest of the project finance facility.
Great. And a couple of questions here further related to different aspects of the project. What is your timeline for the next resource update?
Yeah, so we would look to have the resource update by the end of the first quarter. That will allow it to sort of fit in the timing for the overall feasibility study project.
Great. And what are the main hurdles to overcome in the permitting process for the projects? What is the expected timeline to complete permitting and the risk of material delays?
Yeah, the biggest risk is the federal process. It's relatively new. The nice thing with our project, and again, drawing from our experience with Dumont, the waste rock and tailings are considered non-deleterious. Other than the fact that we are going to dig a big hole in the ground and have some big piles around. From an environmental perspective, it's relatively very low impact. So we're not expecting any delays in terms of the nature of the project itself. So with the provincial process, not expecting, any issues at all. On the federal process, it's just a question. It's still a relatively new process. So, we're just not quite sure exactly how long it'll take. We're targeting to get done by the end of 2024 so that we can be in production by the end of 2026. But, it'll just depend on the feds. And again, given, not only is the project itself, relatively minimal impact, the fact that, we would be a critical supplier of EV materials, and both the provincial and the federal government have stated strategies that they want to encourage, kind of mine to car, EV strategies. So, hopefully that, helps us get through the process a little quicker.
Great. And we have one specific question here, but in the PEA, there was a component that mentioned kind of partnering with a steel plant,
Yep.
Maybe having one built. Have you had any contact with U.S. Steel regarding their new $3 billion plant? They're looking for a place.
No, we won't do a big $3 billion steel plant. That will need to be closer to, closer to Southern Ontario. But in terms of stainless steel operations, In terms of coming up with that for the PEA, we were working with one of the leading European consultants at that time. And so, and again, in my past life, we invented a roasting process that makes it possible to take sulfide concentrates and get it into the stainless steel process, which Tsingshan built 2 of at one of their plants in China. So, based on my relationships from 20 years in the nickel business, think it's a very again, in 2022 we'll ramp those up as we sort of get going on the feasibility study, but I'm not expecting any lack of interest. Generally stainless steel in US and Europe is dependent on scrap as a feed. Prices right now are even much higher than the kind of prices I showed in that chart. And so, they would all love a way to be able to expand their business if they had a stable source of feed. So, I think there's a nice opportunity for both of those things to come together and for us to benefit from that.
Great. And one question here. One listener said, I liked your previous comment on biochar in your past interview. Can you feed any more details on it?
Yes, for sure. So, in terms of the stainless steel making process is, we have a big advantage versus, versus what's going on in Indonesia, because all the electricity in Ontario is relatively low carbon. It's not coal-based as in Indonesia. But the other part is that you do need to put some carbon into the process as a reductant to convert the minerals into metal. The great thing is Timmins, is still a big, forestry product center. It shrunk quite a bit over the last 15 to 20 years. But there still is a huge, if anyone's driven by any of the along any of the highways nearby, you can see giant piles of waste wood. We've already had some discussions with some players in the space. They would love a home for certain types of wood. And so the opportunity to be able to have a market for it, would be really attractive to them. So, we're pretty excited that there's this nice synergy with the Timmins region to be able to do it. And again, all you're doing is making the same charcoal, slightly more engineered, but not that different from the process of charcoal. We'd obviously need a few more bags than that to make, hundreds of thousands of tons of steel, but it's effectively a similar process. And we think given the waste wood that's available there, it would be a very profitable path to market.
Great. We did have one follow-up question related to nickel demand in vehicles. Vehicles that utilize NMC 811 and are energy dense have unfortunately been delayed recently. They mentioned Cybertruck. Do you have a time frame in mind when nickel demand will pick up to accommodate these vehicles' demand?
Oh, no, I mean, Cybertruck may have been delayed, but there are lots of other models out there that have been selling quite well. And so, what we've seen in terms of, sales by battery type is again, the LFP has gone up and the high nickel batteries have gone up, and the middle part that had some nickel in it, 1/3 to 50% nickel, has really collapsed. But net, we've seen an over 120% increase in nickel utilized by the EV sector so far this year. So,
great. And yeah, one or two more questions, but really related to kind of looking forward. What do you think will be the main catalyst events within the next 12 months for the company?
Right. So again, we're going to have sort of two major new sort of sets of news flow. So, in terms of the feasibility study, you're going to see, we're continuing work on the metallurgy program. And so as we make improvements to the process, and we think there's some pretty meaningful steps that we'll be able to unlock, you'll see news flow around that. You'll see the resource come out, and again, additional drilling results that are supporting that resource come out between now and the resource coming out at the end of the first quarter. There'll obviously be the feasibility study, which will be in place and out by this time next year. And then, the other key piece is really unlocking the district scale opportunities in Timmins. We've got our 5 option properties, and we've identified some other targets. And again, I think, people will be pleasantly surprised in terms of the scale of some of the opportunities that are out there. And we're going to be working hard using our proprietary geophysical view of things, to be able to pick up what we think are some pretty interesting targets and start to unlock and highlight what that exploration potential. Because, at the end of the day, when you see mining projects get taken out for 1.2 times NAV, 1.5 times NAV, what it is, it's, fundamentally a robust project, that's anchored in a much larger resource, that the project is not able to fully take advantage of in whatever engineering study is there. So, we're going to work diligently on both of those fronts, over the coming 12 months. And we think that's going to be a great way to surface value for shareholders.
Great. Great. We had one question. It's a little different, but obviously you have firms you work with, but what engineering partners are you considering for the feasibility study?
Yeah, so our lead engineer has been Ausenco. We started working with them in my past life in 2011, for two reasons. One, they're very good at large scale milling operations. So they did Taseko's phase 3 operation at Gibraltar. They did the Constancia mine for Hudbay in Peru, which is operated above nameplate capacity. There were some pretty spectacular oopses that happened back in the late 2000s, early 2010s. And they were quietly brought in behind the scenes to fix the flow sheet. And so, they're very good at that part. The other key part is, Mount Keith is the grandparent of these kinds of deposits that was developed in the mid-90s. And a couple of the key metallurgy people were involved in helping to ramp that deposit up back in the late 90s, early 2000s. So they're very familiar with all the kind of ultramafic nickel deposit that we have. So Ausenco's our master engineer. We're working with Golder and several other people for sort of key components of the project. So we try and get best in class for a particular group of applications, as opposed to getting one person do everything.
Great. And I guess one final question, but kind of long-term strategy. What is the strategy for the company? Do you want to become a miner and build and expand, or look to potentially merge or sell to a major?
Yeah, no, I think our goal here is, and you can see, Christian Brousseau has been part of the team from very early on. He helped build Osisko. He led the engineering and construction part of the Detour project, and was involved with Dumont all through his life, and he's been part of the team here. So, we have got the team. We can put the team in place to be able to build this. I just think, given the scarcity of nickel assets, we've got that slide in the presentation talking about all the various corporate activity that's there. I think if for whatever reason our share price isn't quite as high as it should be, we won't be able to, to get it into production. But, the key thing is we're going to push as hard as we can, and be in a place to do it, because ultimately that we think will unlock the most value. But again, we won't do anything stupid from an equity perspective, to be able to just so that we can build it. If the right offer comes at the right time, then we'll sell into it. But our hope is here. And again, when you look at the leaders of new generations of nickel supply, they've tended to trade at premium valuations. And I think once people really understand what it is we've got, I'm hoping that we'll go through a pretty significant re-rate in the future.
Great. All right. Well, I think that's all the questions we have for now. I'd like to thank Mark Selby from Canada Nickel for presenting today. And thank you everyone out there for tuning in and for your keen interest and all the questions today as well.
And thank you, Tim, and all the support from Red Cloud. It's been great.
Great. So just a reminder, Red Cloud Securities will be back tomorrow, Tuesday, October 5th, when our webinar series continues as we present Silver Viper at 2 p.m. Eastern Time. Everyone have a great rest of your day.